Good morning, everyone. I'm Shep Dinas, your 2021 NAIOP Georgia President, and thank you all for joining us this morning for this exciting event. I'd like to first thank Amy Curry, our VP of Events, and her committee, Justin Parsonet and Heidi Swigert, for their efforts in planning this event. One which I'm very excited about. I next like to thank our sponsors. Our sponsors help us bring great programming like this one today. And so now our platinum sponsors, BB&T SunTrust, now Truist, Brassfield and Gorey, Highwoods Properties, Majestic Realty, Mayberry Electric, Nelson, Ryan, and Troutman Pepper, and our premier sponsors, KBD Group, Trammell Crow Company, and Randall Paulson. And now I'd like to welcome back Fidelity National Title as our platinum sponsor for 2021. Thank you, Fidelity National Title Group, for your support. And now I'd like to cover some NAIOP Georgia business. But first, if you're interested in sponsoring NAIOP, please contact Debbie Koenig or our VP of Sponsorship, Brandon Houston. And now on to some NAIOP Georgia business. We are excited to welcome back our NAIOP School Challenge this year. I'm excited to announce that David Haddow has produced another great case that all 4 schools have been working hard on over the first part of this year. The written presentations are already in. The judges are beginning to work on those. And it's going to be a little different this year than in years past. But I'm excited to announce that on April 22nd, so mark that date, you will have the opportunity to watch the winning team present their case, and where we will also announce the winner. And so again, please mark April 22nd and look out for more information on that in the coming weeks. Next, I'd like to update on the NAIOP Georgia Diversity and Inclusion Commercial Real Estate Summer Internship Program, which we mentioned at our last meeting. We have been very busy on this program, and I'd like to thank Greg Bowler and Suzanne Markley for all their efforts. We've had numerous amounts of students inquire about the program. Our partner companies have been interviewing them, extending offers to them, and we've already had some acceptances. And so we're very excited about the progress of this internship program and getting these students exposed and access to the commercial real estate community here in Atlanta. And we will continue to update you all as this program moves forward. And so now I'd like to turn to the program today, the ESG evolution. One that, like I said earlier, I'm very excited about. When Amy Curry and her committee proposed this as the topic for our March meeting, I was, just love the fact that I and all of you were going to have the opportunity to learn more about this topic, which is one that I've been learning about and have been looking to learn more about. So I'd like to now introduce our speaker today, Rex Hamry with JLL. Rex is JLL's National Director for Sustainability Services and is a lead accredited professional in building design and construction and operations and maintenance. Rex leads a team of sustainability consulting, commissioning, and building analytics professionals throughout North America. He manages project and portfolio sustainability strategy, health and wellness and efficiency programs, and helps clients establish and deliver ESG strategies throughout their business operations. So before I turn it over to Rex, I'd like to, we want this to be somewhat interactive. And so Rex is gonna start his presentation, and about halfway through, he's going to stop and give the opportunity for some questions. And then we will also, then he'll continue his presentation, and then we'll have Q&A at the end as well. So please submit those questions along the way, have them ready, and know that we'll kind of have 2 opportunities for Rex to answer them. And so now, Rex, I turn it over to you. Thank you so much for joining us.
Thank you, Shep. I really appreciate the time today with everyone and an opportunity to talk about kind of ESG, environmental, social, and governance from an introductory perspective, but then also try to take you through to what we're doing today and what we expect from the future. So I'm going to try and accomplish 4 things in, somewhere between 30 and 40 minutes. And it's a pretty big lift, but I think together we'll get there. So we're going to try and talk about what is ESG, why it matters, especially to organizations that are members of NAIOP, what makes ESG valuable, and then, really what's next. What do we need to be worrying about and working on over the coming years, and what do we expect in 2025, 2030, and 2040? So we'll go ahead and jump in. A couple big ideas before we try to define ESG. So a push for a more sustainable world. This is something that we really see, observable across all industries, across the future generations in the workplace, individuals, corporations, across the board. And so I just want to kind of use that as a little bit of foundation setting around these ideas that we're going to be talking about with ESG. Sustainability is becoming an increasingly important aspect of everything we do. And climate change is something that we have to face as a society as well as businesses. And this is, and ESG is an important aspect of that effort. So a couple other big ideas from a business perspective. What we're seeing is a shift from a shareholder economy to a stakeholder economy. And this is going to be really important as we talk about ESG, that it's not just about, the financial performance and the profit generation, but this kind of triple bottom line: people, planet, profit. It's unlikely that I'm introducing anything new here, but I just wanted to make sure I was kind of connecting the dots, that there's a real, synergy between sustainability and ESG. In a lot of ways, they're kind of used interchangeably in conversation and in the commercial and corporate real estate industries. But this is, important aspects of kind of where we're considering. So when we're talking about ESG, we're talking about financial performance. We're also talking about environmental performance, reducing impact on climate change. And then we're also talking about, the social aspects, the people, our workforce, other stakeholders of the organizations, et cetera. Okay, so in case everybody stops paying attention in the next minute or so, we'll dive right into what's ESG. And it's something that's, it's interesting. It's a little bit difficult to define. If you just go and Google search environmental social governance, you'll get a lot of different hits, and it kind of gets used in a lot of different ways. So I'm just going to try and keep us focused on a core elements of this, and the fundamental incorporation of environmental, social, and governance factors into core business processes for an organization. So that's really what ESG is. So like I said, you'll often hear, do we have a sustainability plan for an organization? In a lot of ways, ESG, that is, that's a more comprehensive look at a sustainability process or a sustainability program. In addition, so let's break down the 3 topics here for a second. Environmental. So that's, reduction in climate change, high performance buildings when we're talking about real estate, and, digging all the way down to like at the asset level, we're talking about things like Energy Star certifications, LEED certifications, Living Building Challenge, net zero energy. That all fits into the environmental category. And in a lot of ways, that kind of drives the majority of focus on ESG today, but that's something that's evolving and we'll talk about later. Then we've got the S, social category. So this is where we're actually looking at labor practices, talent management, things like product safety, community integration. And this is something that often gets kind of left alone or has a lack of focus while we're really focused on climate change and the environmental. But one thing that we're learning is there's a lot of integration when you implement, environmental improvements to your organization's performance, to the asset level improvement. It ends up also driving towards benefits in the social category as well, and vice versa. And then finally, governance, board diversity, business ethics, management processes and systems. So in a lot of ways, you can, the governance sort of loops back to the environmental aspects, to the social aspects, and is about how are you managing those parts of your business? Are you documenting them? Are you publicly reporting them? What are the processes in place so you make sure that you have a continuous pathway of improvement towards environmental and social goals? So that was in a minute an attempt to summarize something that's quite extensive in our industry and across industries. I should also mention, I think it's really helpful to say you also hear corporate social responsibility, CSR, along with sustainability. Those things get kind of used interchangeably. ESG is really driven out of the financial sector. So ESG is a lot about institutional investors for us in commercial and corporate real estate. It's about the financial reporting, the regulatory aspects of sustainability, of corporate social responsibility. So that's kind of how those categories all interrelate and how they work. I will say also that I think it's beneficial to know ESG is kind of taking the lead as far as the go-to terminology around all of these aspects. So you'll hear ESG used not just when you're talking about the additional aspects of financial disclosures, things along those lines, but from a holistic perspective. And then you've got kind of these three big categories listed here on the slide: reporting, performance, and ratings. So, this is about disclosing the data, such as what is our carbon footprint, the performance, how are we actually performing within the domains of ES and G. So not just, not about the actual, say, carbon footprint, but how are we actually tracking against all of that. And then the ratings. So there's a lot of different rating systems, and we have a slide that attempts to hit on a number of those that we should be focused on around evaluations. So essentially the rankings from an ESG perspective for an organization. Okay, so like I said, hopefully, at least for those that this is an introductory topic, that's a good place to start. Now, why does it matter? So I think that most of us have probably seen the Larry Fink, BlackRock, his annual letters around sustainability, ESG, and the transition towards this being a focus. So, noting that we've got that 98% metric around non-financial disclosures making investment decisions. It's also, for example, one of the fastest growing aspects of financial investment today. So this is where ESG aspects, sustainability aspects into financial investment, this is really driving the private market. Okay, as I alluded to a second ago, fund flows to new heights. So we're seeing a really fast acceleration of investment dollars into ESG impact-oriented funds. And we expect that to continue to increase. So essentially, again, we're starting to see this through line of there's opportunity for additional investment when you have a real ESG program. Net zero carbon commitments. So net zero, as far as from a net zero energy, if you're talking about a building, or net zero carbon, if you're talking, about a more holistic aspect or at the portfolio scale, this is about more and more businesses committing to net zero, as both businesses, other organizations, and then also, cities, states, countries. And this is also another thing that's accelerating. What we're really seeing is we're starting to see something of a tipping point where this is becoming more par for the course. Whereas just a few years ago, there were a relative handful of net zero carbon commitments. And now it's something that we're seeing in a lot of different places. I'm going to fast forward to the end for a second. So what you're going to see is your tenants are going to start to ask you what your net zero carbon plan is. And it's important to have an answer for that from an asset perspective, as well as a portfolio perspective. This is something that's really useful and is an important takeaway to the point. We have to start planning as an industry how we're going to deliver on net zero carbon for our clients, for our tenants, and for our communities. Okay, now this is why we have a big role to play, and also why it's a really exciting opportunity. You'll hear me use that word a lot about opportunity. What really excites me, and I'm excited to talk to NAIOP about this, is this is a real chance for like strategic advantage for our industry and for our businesses. If we orient in a cost-effective way from a financial performance perspective, we have a chance to really, outperform the general marketplace when we're looking at ESG factors and incorporating them into our business operations. So we're almost 40% of all carbon emissions, building operations, and then design and construction. So this is something where if we're talking about as a planet getting to net zero, we have a big part to play, and that's an opportunity for us to figure out how to get there. And then I wanted to get to, what are the key to sustainability outcomes. And I really like using this slide because I think it's useful to know you're not alone if you don't have all of this figured out. I think when you look at the current media environment around ESG and sustainability, there's sort of a perspective of a lot of companies coming out and making a big commitment and saying, we've got, we're going to net zero by 2040, or, we're going to reach net zero carbon by 2050. And here's how we're going to do it. The how we're going to do it is the part I'm really focused on here. So, 96% of JLL's top 50 clients have set ambitious sustainability goals, something around, a renewable energy target by 2025, or maybe they have a percentage of their portfolio that's going to be LEED certified by a certain date, or, something that's even more timely right now, net zero by, 2030, 2040, or 2050. 88% have set up specific 2025 goals, which the highlight there being that's really, really soon. And so that's something important to consider. But there's that third category. Only 19% really have plans from a commercial and a corporate real estate perspective. So they may have set those goals, but the kind of baseline, what are we actually going to do with our real estate? Because of course, the buildings are there, the costs are there. That's an important aspect to it. So that not everyone has this really figured out, and there's a lot of opportunity for us to, wade into the specific initiatives around ESG and sustainability, and actually gotten a framework and a roadmap and an action plan to achieve those goals. So again, maybe your organization has set some goals or even talked about some of those goals, but you don't actually have it exactly figured out. Well, how do we get to those numbers in 2040? You're not alone. And that's something that, we're having to really face as an industry. Okay, like I said, I wanted to pause for questions here because then it can kind of direct me towards some of the parts I'll focus on in the balance of the presentation. So Stacy, is that your job to pose some questions?
It is, Rex. We have just a couple of questions here. The first one is there a generally accepted entity that measures a company's ESG friendliness?
What a great question. Okay, so we will cover that in a future slide. And the short answer is there isn't really one entity. And that's, like I said, when I was defining environmental social governance, that there's kind of not just, one simple definition that you'll see used across the board. It's really more about kind of like an organizational program or a set of processes. There's a lot of different frameworks in place. And so, for example, I almost feel bad, naming a couple specific, but as an example, so we have GRES, the Global Real Estate Sustainability Benchmark. So when I'm talking to, real estate owners, developers, portfolio managers, that's probably the first I bring up around if you have, real estate operations from a globally recognized framework for ESG performance. So if you're going to pick one, then, you can go and do a set of GRES reporting. And it's a framework from a process perspective, sort of similar. A lot of you have probably dealt with LEED, which is, for an individual building. So you can kind of think of GRES, oversimplifying, as something of an aspect for, LEED for your portfolio. So that's definitely, quickly accelerated is an important aspect. Building a little bit further on GRES, that's where we see, institutional investors, particularly globally, and now pushing into the United States and North America, asking, what is your GRES score, or how many stars do you have in GRES? So that's something we're seeing. In addition, another couple that are worth mentioning that sort of bridge the gap between commercial real estate and, the larger industry is, the task force for climate-related financial disclosures. That's also something that we're seeing done by more commercial and corporate real estate operations. And then CDP, which was formerly known as Carbon Disclosure Project. And that's also one of the core really popular. So we're going to go and do at least a carbon footprint, which is a part of an overall ESG program. And so let's go ahead and build a CDP report. So those would be the three that I would probably have if I had to pick those are the frameworks I'd look to.
Great, thank you for that, Rex. Another question. Is a company's ESG rating or friendliness used as a risk mitigation strategy when customers are considering doing business with them?
What a great question. So I think that the short answer is absolutely yes. Risk is an important aspect of this. And so when we're talking about ESG from a holistic perspective, you might be, if you had to sort of distill it down as they all relate to each other, we're talking about resiliency and we're talking about risk mitigation. And so when we look at an organization that has, high environmental performance, that, isn't as reliant on the grid, that has, a programmatic approach to their social and community integration efforts, that's a company that has lower risk as we look toward, the unknowns in the future. And then that also makes an organization, a company, more likely to be resilient as we go forward. So we have resiliency, which is, essentially a core aspect of risk mitigation at the asset level, such as, just continuity of operations. Will the lights stay on? Can we continue operating in this building? All the way up into, is this a resilient community in which these assets are operating? And is that a place that's going to be beneficial for our tenants and those that we do business with?
Great, Rex. Thank you. Do you have time for one more or should we move on?
Oh, no, I'd rather spend all the time on questions, actually. So okay. Yeah, this is great.
Awesome. So when you think about the ESG, the role, we're switching gears just a little bit here. Are the majority of companies creating a role for an individual to be head of ESG efforts?
That is also a great question. And the short answer is, again, yes. Increasingly, there is a director of ESG or an ESG manager across all different kinds of organizations. And so one of the things that can be really beneficial when we look at commercial real estate, if you are an asset manager, portfolio manager, is to be able to have someone that's dedicated to these efforts. And then you have a point of contact when you're talking about, with your clients and your customers. In addition, that's actually one of, we talk a lot about box checking in sustainability and ESG performance. And fundamentally, the idea is to get away from box checking, that this is about, making it a real operational part of everything you do in your business. But an important box to check, you get credit for in these various frameworks. When you look at ESG or CSR performance on those, free, internet rankings, one of the places you get credit is, do you have an ESG director? And I think that the idea I want to plant when we're talking about kind of today, which is the answer of yes, there are, the organizations are assigning someone to be responsible for ESG. The next generation of this is that person really in the C-suite? Do they have true influence at the highest level? And I think that's where we're really going to start to see transition. So maybe, traditionally a sustainability manager or an ESG manager, speaking specifically for commercial and corporate real estate, will have a responsibility about properties, responsibility for building performance, data tracking, but maybe not as much access to the strategic business decisions of the company. That's what's really transitioning. I think 5 years from now, 10 years from now, there's going to be a real, do you have a chief sustainability officer or an executive director of ESG? And that's probably where we're headed.
Great, thank you, Rex. We have another question. This one is a little bit lengthy, so I'll go slow so you can absorb what we're asking here.
I'll do my best.
Okay. As market behaviors evolve to embrace ESG components like life cycle assessments and EPDs, do you see that as an opportunity for the market to also adopt more holistic views of their total cost of ownership? And the second part of that is to get beyond general rating systems like LEED and to real analyses of which material and systems might provide better long-term performance, even though they may cost a small bit more upfront.
That was great. I feel like whoever asked that question, maybe they should have been a part of this presentation. That's a really informed question, and I liked it a lot. So we are seeing a transition towards the necessity of looking at this holistically. So when you start to talk about a portfolio or an organization committing to net zero carbon, it's not just about, buying carbon offsets or buying renewable energy credits. For one thing, that's not, that doesn't really get us as an entire society to where we need to go. We need to be making real investments in the reductions. And then additionally, what's been really interesting over the last 2 years is to see how, kind of that offset mentality has become less and less acceptable from the stakeholder community. And so I think that that's something that's important to note there as we transition to the holistic aspects of ESG performance and how this works in our businesses. Additionally, the total cost of ownership. I think this is also something really exciting, and we're seeing a lot of change about this right now. So carbon taxation and also establishing internal carbon costs for our projects and our operations, that's something that we're starting to implement and we're starting to see. For example, in Canada, I think just this week or last week, they just confirmed that it's legally allowable at the Supreme Court level to start to increase their carbon taxation. So that's going to, it's going to be done at the fuel level and just push all the way through the supply chain of all industries and particularly, heavy utility users like commercial real estate. Looking at the real analyses, that was a great part of the question. I think that that's the other thing that we're excited to see. As noted, so LEED was really valuable. Well building standard, Energy Star were really valuable about starting a disclosure process, starting to really orient a business case and like a marketplace framework, market accepted framework for sustainability performance. But they only get us partway there. So, I think that what we're starting to see is it's anecdotal and piecemeal right now, where you have at the asset or project level, putting real plans together for how do we transition these projects and operations to net zero energy and or net zero carbon, and actually putting together the analyses of how we're going to get there at the project and portfolio level. So, it's a combination of where are we buying renewable energy? Does our utility have a true green purchase program? Are we reducing our energy use intensity to a point where it's actually going to be practical at the portfolio level to get to net zero carbon? I think we're going to start to see a lot of that, be an important aspect of this. And what I want to highlight here is if a lot of those sets of terms that I just used in the last 30 seconds are new to you, that's okay. And that's what's new about this. And that's the place you have an opportunity to start to look. If you haven't had a tenant ask you today yet, what's your net zero carbon plan? That's something that's going to happen if you have, if you're chasing a big technology firm, because they're going to have to be looking to their partners and their supply chain and their real estate operations to help get them there.
Thank you, Rex. I think we're ready to move on with your presentation.
Great. And so I'll try, like I said, some of those really good questions, we'll probably address a few of those at the end. And as I mentioned, I have no problem potentially giving you a few minutes back or spending extra time at the end for questions. Okay, so let's talk about value. And this is something that's really interesting to me because we're seeing a lot of regulations increase around sustainability. So in the United States, it's really been driven at the municipal level, where you see, several dozen, I think at last count, we looked at 48 major municipalities that had reporting or performance ordinances. Then we have, a lot of states implementing targets around carbon footprint reduction or net zero. But what's interesting to me is this isn't just about compliance. This is an opportunity for, really driving business value in our commercial real estate operations. Okay, so a little bit more about why we should be investing in this. When we proactively manage sustainability strategy, and again, this is a good example where sustainability, being sort of a plug word for ESG, higher overall return on investment. From a corporate responsibility perspective, we're looking at risk mitigation, like that great question alluded to, and the ESG and CSR integration to overall corporate operations. Long-term returns and growth, regulatory change, as I was talking about, and then public image. It's not cynical to note that this is something that's valuable from a branding and a marketing perspective. I always say to my clients that, the reason it's worth spending that extra little bit of money to go after one of the frameworks, whether it be LEED or WELL or FitWell, Energy Star, is that's like one of those market accepted labels. So you don't have to spend all that time sort of communicating exactly what you've done. It's sort of, oh, okay, they have committed to an ESG and a sustainability program. Going back to those long-term returns on growth, these are the things that are, kind of the existential crises for businesses, for the tenants in our buildings. What are we doing to attract Generation Z? How are we retaining our best employees who increasingly are not just looking from a financial performance perspective, what I get paid, but a balance of, where do I work and am I proud that I work there? And then, directing down to the, enhancing the asset value on like lowering operating expenses and improving NOI. Those don't go away as we transition towards, a more regulated marketplace for ESG performance. These are still the core aspects of sustainability and ESG in commercial real estate. And those are the things that we focus on as a foundation and build to, a market leading ESG program. So a little bit about trends. And as noted at the beginning, this is something happy to share this presentation out and hope it's useful for everybody. At the end, I know there's a fair bit of data points and information here. So I talked about this at the beginning, the elevation of the S, of the social. A lot of the regulations we're seeing and a lot of the focus on, what's really well known in CRE is around the environmental performance. But increasingly, social factors are escalating in importance. Those are accelerating in note. So what are you doing around your community integration? How are you communicating your labor practices? Diversity, equity, and inclusion is sometimes for some of our largest clients becoming even more important than the environmental. And that's kind of, they say that more important than environmental, but more about what it's really about is kind of making an equivalency and that they want to focus on both at the same time and they're of equivalent importance. Going even, a true aspect of decarbonization, operational emissions, and supply chain. So we're not planning on diving into scope 1, 2, and 3 emissions in this presentation. Maybe that's something for a future discussion, but really looking at what's the overall total impact of my business and of my operation and where can I be most impactful in reducing that. You'll hear me say this a couple more times. Don't forget about health and wellness. As we transition towards this environment where, recently, just in the last few weeks, the SEC announced that there's going to be guidance around ESG disclosure from a financial perspective. And that's something that then will, trickle out globally around how we're reporting. Health and wellness in the workplace, the impact of the people in the spaces doesn't go away as an aspect of importance. It's part of that elevation of the S in the ESG, but also it's one of the biggest areas of financial impact we can make. If we have a building that improves health and wellness outcomes, productivity by 1%, that far outweighs anything we can do around, 20%, 50% energy efficiency at the asset level. So the question that was asked noted one I wanted to make sure to highlight, the resiliency to ESG and making sure that resiliency and risk mitigation is an important aspect of every part of the ESG program. I think that this is also something we're seeing advance really quickly. And I'm excited about sort of the intersections of where this goes. When we're talking about, on-site renewables, we're talking about backup power generation, we're talking about, putting together a real plan for continuity of operations. That's really beneficial from a financial performance and a sustainability performance of the assets. And then it's also beneficial to our more holistic views on ESG. And then where I'll finish as far as speaking to the slide, data activation. A lot of the time we'll talk through a presentation with a client around what should be our ESG strategy. Where do we start? We've been doing a lot of relative piecemeal things, like maybe we have a handful of buildings that have certifications. We have a relatively manual process about tracking our utility use, and we've established some corporate level goals, but we're still trying to figure out how to implement them across our portfolio. Data activation and focusing on data, that's one of the first places to start. We need to know where we're spending our utility dollars. We need to know where our operational uses are, and then we can start to put together plans around making real changes and making real updates and upgrades. That allows the sustainability teams to really start to put together comprehensive plans about the best way to invest over the next several years for ESG performance. Okay, so this is in demand. Cost premiums around certifications. So this is, from a global perspective, what we're seeing of additional costs. But then on the right side there, seeing significant rent premiums, significant leasing acceleration, and then cost savings, which has an impact on building value. I think this is something that's fairly well established, but it's always worth referencing back to, especially as we're spending a lot of time, stressing around what are these regulations coming and how are we going to be compliant with them. There's a lot of business case for sustainability and health and wellness in the workplace. So a commitment to science-based targets. So science-based targets, is the easiest way to think of this is, it's kind of the most, aggressive aspect of ESG and transitioning to net zero. And it's about a significant annual reduction in your overall usage. So as you see companies committing or aligning with science-based targets, this is something where that's going to then trickle down to how is your building helping me perform on those annual reductions that we're trying to hit? Because if you're aligning with science-based targets, you have a significant percentage annual reduction every year that you're trying to reduce your overall carbon footprint. Okay, diving into what's next. So that was meant to be kind of a baseline and then what we're seeing today. And in this next section, I'll try to make sure I cover, what should we be doing now? How is this going to get tracked? Who am I reporting to? It was a great question earlier. And then, what's going to happen over the next few years? So this is where, each piece of this should be oriented when we're looking at around ESG. Underwriting for sustainability, risk mitigation, resiliency, and acquisition. Looking at embodied carbon, the design and construction impact of carbon footprint for the building. Management and operations, directly reducing emissions over the course of a 30 and 50 year life cycle. That's the core of the carbon footprint. And then circularity, what's the overall life cycle of the building and how do we reduce the impact there? This was the slide that's about frameworks. So why it's a little bit hard to say, what is the framework? You don't have to look to all of these. For example, some of them are, like global regions, or some are more focused on the top around, that's really like commercial real estate or real estate oriented, built environment oriented. And then that investor focused reporting frameworks, the third category there, as I mentioned, TCFD and CDP. A lot of these interrelate, and there's been new guidance around how they, you can have a combined reporting structure to check the boxes of a number of these different frameworks and reporting. And then, as an example, when you put together your CDP reports, you complete TCFD, then that's going to help you, rise in the Dow Jones sustainability indices, as an example. Going after LEED certification in your assets, WELL certification, Energy Star, that's going to benefit your GRESB scores and also help you then with your overall corporate, sustainability reported performance. So these things kind of interrelate, and it's important to start to, put a plan together for those asset, portfolio, and corporate level targets and frameworks. Okay, as I noted, I wanted to make sure we talked about this in the Q&A already, but the race to zero. So we have a lot of countries, a whole lot of cities, and a significantly increasing number of companies committing to a future net zero. And this is something that particularly in the United States and then in North America generally, you're going to see this be pretty piecemeal. So instead of, so far we haven't seen the new administration come out and say there's going to be, we're going to try and push through national or federal legislation about this. But, we're going, when in certain cities you have performance or disclosure requirements, and then we're starting to see, there's going to be pressure around investing in carbon footprint reductions at the asset and portfolio level in these cities or countries or regions. So again, it's an opportunity to get out in front of this because it's going to be something that's, it starts to be required over the next really just few years. I used to get to say 5 to 10 years, but it's happening now. These are the 24 states, I believe, as of late 2020, who've actually set emission reduction targets. So as I noted, in the US in particular, we have a lot of municipal regulation around this, around environmental performance disclosure, in some cases requiring a roadmap of building upgrades, in some cases actual performance improvements on an annual basis or hitting certain targets over the next several years. In addition, we have states starting to implement overall reduction targets. So we might see this start to happen holistically. On balance, I recommend everybody think of this as a good thing because it would actually just be a lot easier if we had a more consistent set of rules that we could be working towards. So your efforts in Atlanta and Miami and New York City could be more similar rather than having to have put together plans and reporting and strategies for each of those municipalities. Like I said, don't forget about health and wellness. This is something that we speak to internally at JLL when we're focused on putting together these plans for net zero carbon and net zero energy. It's easy to get laser focused on the E in ESG, but we also have to make sure we understand there's a fast rise in all of the focuses around the social category, and built environment, health and wellness is one of the places that we can have a real business case for those improvements. So, of those 9 categories, JLL has helped support, a lot of the Harvard School of Public Health studies around the impact of the built environment on health and wellness. All of these categories, these should have an aspect in your building operations, in your development and design plans, because these are the things that are going to be, really important for your leasing efforts over the next several years. Then they can get incorporated into your environmental performance targets, and then they can feed up into your overall ESG programs and planning. So there's kind of baseline level, efforts that have specific cost effectiveness and financial return metrics. Those can then feed up into what we're trying to do from a portfolio or organization perspective. Okay. How can I make this a strategic advantage? So this is the chance to peek under the curtain of what we actually do. So as mentioned in the intro, my team, there's 41 of us just in North America dedicated to building these sustainability and ESG programs for our clients, both on the occupier and investor side, which ends up making us, we try to be a little bit more helpful then from the investor perspective because we can tell them what occupiers are looking at. So these are a few steps that you can consider when you're trying to make this a strategic advantage to your business operations. Making sure you focus on alignment first. What are these enterprise level sustainability targets and how can you incorporate them into your commercial real estate operations? Where do you have data gaps and how, figuring out a plan to start to fill those? Like I said earlier, focusing on data. So like I said, this hopefully is something that's useful. Maybe a lot of you surely have some pretty comprehensive sustainability and ESG programs. And so maybe you check every one of these boxes and you've worked on all of them. And that's wonderful. I'm hoping that it's at least something that can be used as you think about, well, what should we be doing next? And what should be the next steps? Looking at step 2 for a minute, identifying those opportunities and building an action plan. So we have the commitments, and then we have the actual roadmap and the action plan. What are these tangible actions that will align to our goals and help our overall performance targets? Work on the business case. That's something that's really valuable. Should we be investing our dollars today in renewable energy, or in health and wellness, or in just energy efficient operations. So the key there being, in a lot of cases, traditionally, well, the obvious return has been that efficiency. That's the real benefit. But renewable energy is also something that's useful as an example to push forward. It's visible. It's something that really benefits your overall carbon footprint reduction. It's an efficient way to communicate your overall ESG programming. So essentially looking at what's the holistic business case, maybe not just purely the quickest return or the shortest ROI. And then going down, what is your data management plan? I think if we fast forward a few years, all of our commercial real estate portfolios are going to need to have, a centralized dashboard of the utility usage, our operational parameters, and instant reporting on our carbon footprint benchmarking. You end up having returns from that perspective, just from, the more information you have, where to orient your operational improvements. But in addition, it ends up being much easier and much more efficient to do all of your reporting when you have that all centralized and activated. It's something that's, I always, having worked on individual assets, I know it's not as easy as it sounds. It's worth making those investments and starting to put together the plan around, if we're an owner landlord, do we have owner supplied sub-meters at our asset so we can actually start to pull all of that data more efficiently, not relying completely on utility or municipal supplied meters. Those are the kind of foundational things that will end up really benefiting your overall program. Finally, for step 3, operationalizing these actions. So we have a lot of the time, what's most likely is that people aren't actually stepping into this from step 1. Usually we've done a lot of sustainability initiatives at the asset level or the portfolio level, and maybe we've even done some reporting from an organizational level. But it's about putting together a holistic package of where are we going to focus, streamlining the data management, monitoring outcomes, and really turning this into a cyclical effort on an annual basis that is that it actually has a roadmap towards those sustainability targets in 2025, the ESG targets for 2030, and what you're trying to accomplish from a reporting and competitive advantage perspective. So looking at those, trying to bucket those so everybody from the highest level, from the CEO down to the individual engineering operations, has something of an understanding of what you're trying to accomplish holistically, and that kind of end-to-end process around sustainability and ESG from a strategic perspective. Okay. So I think that gets us to Q&A. Hopefully I landed on the time so we have a few minutes. So Stacy, do we have anything else?
We do. Thank you so much, Rex, and we do have time. Okay, so the first question is, you just walked through your 3 steps, but for smaller companies that don't have the staff or resources, what steps can they take to begin to evaluate and implement ESG changes? Like, what would you prioritize as well?
That's a great question. So I'm gonna, before I stop sharing, I'll step back to this so people can look at it a little bit. That, first of all, prioritizing establishing that sustainability baseline, and also, mentioning again, look at it from both a sustainability and a holistic ESG perspective. So even if your S just starts around your community integration practices, what are the individual assets or your organization doing from a community support nonprofit partnership, starting to document that. Often it's good to, you can align someone with just a percentage of their time, give someone a 25 or 50% allocation to focus on ESG endeavors over the course of a year. And then that starts to set up the program. Then, as noted, this is a lot of smaller organizations. You're not going to have a staff of 1 or 3 or 5 people internally that are just dedicated to sustainability. It's important to have, you set up that point of contact that is, focused on this from a programmatic perspective internally, but then find the right sub-consultants or the right third-party teams to help guide you through that. It can be something, it can be small. It doesn't have to be, multi-million-dollar efforts around building a visioning and sustainability ESG program and then reporting it to drive towards, Dow Jones sustainability, report performance and moving up that index. It can also just be about, when our investors are asking us what our ESG platform is and what the program is, that we have real answers to each of those categories. Do we have a governance plan in place? Do we have a set of social targets that we're working on improving? And what is our overall environmental program? So it can start small, both internally and then working with external partners. And that's something that's going to benefit you and keep you in competition with the larger players.
Great, Rex, thank you. Another question. Do you support appraisals that will quantify the benefits of sustainability?
I think that that's a great idea. And what a lot of the time what we focus on is when we're in the acquisition process or the site selection process, making that a really important part of the overall ESG program. You know, when we talk about moving the marketplace, what really gets us excited is when we can work with investors and developers, putting the plan together even before they've decided what they're going to build or where they're going to build it. And then on the occupier side, where we really say, oh, this is going to move the marketplace, when we have, you know, a global entity that's going to commit to a site selection and leasing process around ESG performance. And so the appraisal process, I think, is a great place where we're going to start to see that, you know, whether it be from a carbon footprint reduction allocation perspective or just an overall financial aspect of, you know, what is this building's performance? Is it more efficient and therefore a lower environmental impact than the comparable, and therefore, you know, it's worth more money? It's something that, another example being, does it have renewable energy or a resiliency program that's set up? That really does make the building more valuable. So that should be allocated for in the appraisal process.
Thank you so much, Rex. One point I want to clarify for everyone on the call as well is that if you would like a copy of the slides that Rex is sharing with us this morning, please send a request to either Debbie or Heidi, and they will definitely get those out to you. All right, Rex, so we're getting closer to the end of our time here together. So as we think about all of this and everything that you've shared with us, where would you recommend that people find more information to learn more about everything that you've touched on this morning?
Great question. So I think that the best place to start is if you go back to those frameworks and you start to work backwards from what is required in the frameworks in order for improved performance. That's worth looking at in the whether or not, you know, you're a big organization that is already doing a programmatic sustainability effort and you want it to turn into something more holistic from an ESG perspective, or you're a smaller organization that's really wondering what to do outside of just individual asset decisions. Looking at those frameworks and seeing, okay, what does it really take to improve our GRESB score, or what's required in the TCFD, and how are we actually going to improve within the metrics of Carbon Disclosure Project? That's what I recommend, and essentially starting to look at it from you know, looping back around to then how do we start to drive our performance at the asset level, portfolio level, and organization level.
Great, Rex. That is all of our questions that we have this morning here. So we're going to turn it over to Shep.
Thanks, everyone.
Thank you, Rex. That was awesome. We feel Rex is speaking on this topic at a global conference tomorrow. So we feel very fortunate to have him and very lucky to have him as a part of the Atlanta real estate community and available to speak to us today, and some great information, some great learnings. So thank you, Rex, again for the time. This is it's a topic that is evolving. There's a lot of depth there, and just for all of you, know that we recognize that, and you know, appreciate Rex giving us a great intro. But we will also be looking at ways to continue to explore this topic and explore the E and explore the S and explore the G as a part of our future programming. So please stay tuned. If you enjoyed today's program, there's more to come here. I'd like to take this opportunity before we wrap up to thank our sponsors again, our platinum sponsors, BB&T SunTrust, now Truist, Brassfield and Gorey, Fidelity National Title, Highwoods Properties, Majestic Realty Company, Mayberry Electric, Nelson, Ryan, and Troutman Pepper, and our premier sponsors, KBD Group, Trammell Crow Company, and Randall Paulson. Thanks again to Amy Curry, our VP of Events, and her committee, Justin Parsonet and Heidi Swigert, for planning this event. Thank you to Debbie Koenig, our Executive Director, and Stacy for all their help. We really appreciate you all joining us today. Reminder, April 22nd will be the virtual school challenge, so please be on the lookout for information regarding that event. We hope you can join us for that. And that's a wrap. Have a great day. Thanks, everyone.